Hey YouTube, Jason here with Day Train Fearless. Welcome back to my channel. If you're new, welcome. Make sure you guys hit the like button and also subscribe to the channel. And also check the links down below for the S&P E-mini futures trade zones. $50 for a lifetime subscription. 1 point pays for itself. And then also my Patreon page where you can follow along with my stock option and dividend portfolio. Only $8 a month for that. Again, link down below. But as always, let's jump right into this video. Okay, in today's video, we're going to talk about market profile. What exactly is market profile? Understanding the basics of market profile, and also understand what the value area high and low and point of control is when we talk about market profile. So let's pull up a chart. Okay. Now, market profile is, think of price, okay, and volume, right? So normally you have each candlestick where volume is kind of based on, let me see. Let me add a volume indicator real quick to this, and let's go to 5-day, 5-minute, okay? And let's come over here and add volume to this. We're looking at the S&P E-mini futures. A market profile works really good on the S&P futures. I think it's probably the best, but what we have normally is volume, okay? You could see high volume, low volume, how much volume per candle, okay? That's what's going on with volume down here. Okay, when we start to deal with market profile, what we're dealing with is volume based on price instead of volume, right? Instead of each candle during that 5-minute period, because we're on the 5-minute chart, there was this much volume, we'll say, like if we zoom in over here, okay, we could see in this candle, we had all this volume, which was 18,000 contracts in that, okay? But that's a move up and down just during that time period. With market profile, what happens is we actually are able to see volume at a price level, right? Not so much time like during a candle, but more at what price. What price did volume trade? So if we come over here and we could see, well, we've had this much volume trade, okay, relative to everything else at this 41.8675 level, we'll say, right? Just kind of making up a number. So what happens is, think of it this way. This is volume. We have two different market profile on here, and these are just pure volume profiles. Okay, you have volume profile and you have TPO profile. They both fall under the wording of market profile, but the two differences is volume profile and TPO. Volume profile is only volume, how much volume has been traded at a specific price level over the X amount of days or time frame, right? So if we go into studies, you could see I have volume profile, okay, and then another volume profile. So these are just pure volume profiles, but this is for consolidated for all of these days. And then these volume profiles are just for that individual day. So I'm able to see two major pictures on one chart. Okay. And a lot of times you're able to see trends and get kind of moves of, is the market going to do this or that during a move? So let's jump into this a little more. Okay. And what we have is, what is value area high and low? How do we read these? What exactly are they? So all the value area low and high is these yellow lines, right? The bottom one is the value area low. The upper one is the value area high, okay? And then the red line here, or the white line over here, is the point of control, where the most volume has traded, okay? And you could see where right here we've had the most volume, right? Because remember, this is just pure volume. So this is where the most volume has traded over the last 5 days, and we could see it's at 4180. Okay, meaning we keep kind of going up and down, back and forth between this 4180, and that's where the most volume is traded. The value area high and low is where 70% of all the volume is traded, okay, throughout this entire move. So from high to low, 70% of all the volume is traded in between these two yellow lines. And what happens is the yellow lines act as support and resistance. As we could see, as we fell, right, came back up, we have the value area low here. So if we were to rally all the way back up here, chances are this will act as a support level. Same here. This will act as a resistance level. Resistance if we're below, and vice versa. If we're coming down, they would act as support levels. Okay. Now, on the individual time, just this one day, every candle's 5 minutes. This is 1 day, regular trading hours only, because we see the gaps, right? That's a really good, easy way to understand if we're on the extended trading hours or a regular trading hours, is you'll see gaps. And all we have is, again, the point of control where the most volume traded during that day, and then value area high and low where 70% of all the volume has traded, okay? And what happens is you also have what are called high volume nodes and low volume nodes, right? These are high volume nodes right here. Something like this, right? High volume node, high volume node. Think of it as a tree, right? If you're in a tree, some branches stick out farther than others. Well, the ones that stick out farthest and look like, okay, that's the biggest branch around all the other branches, that's a high volume node. And then the low volume nodes are these guys where the least amount of volume has traded, and those are called low volume nodes. With that being said, as price falls, okay, and we saw this, well, as price fell, look at this, we came right down to the point of control. And so if you fall out of that trade, you're probably going to be held up and stopped at the high volume node. And what will happen a lot of times is you'll come down and you'll bounce, okay, or you'll pause and you'll get some type of a bounce. Very rarely, it does happen, again, based on market conditions, but there are times we'll blow right through. But you could see we came down and we bounced right off this point of control yesterday, and then we had a nice slow bounce. The low volume nodes, one of two things will happen. You'll either blow right through it or you'll come to it and bounce. Those are usually the two most possible outcomes. I would say flip a coin 50-50 of a bounce, 50-50 of it blowing through. High volume nodes, I would give it about an 80% chance of a bounce, okay? You'll get some type of bounce. Now, maybe it might overshoot, come down to this high volume node here, and then start to clean this up. Because all market profile really is you're drawing, or price is drawing a picture, and it's our job to really try and figure out what the picture is, okay? And then you have something like over here, this is called a distribution, okay? High volume node, right? Very nice bell-shaped curve. And then you come down, right? Low volume node. And then you have another mini distribution right here, which is kind of showing you another where price is being accepted at. Okay. And if we came back down, we would probably spend more time down here. This is just a single distribution with excess to the upside, excess to the downside, and usually that's the auction is over. Here, there's a double top, so there's no excess up here, right? Down here, we have a little bit of excess. Think of excess as a candle wick, right? Just a little bit of excess right here. There's a little bit of excess. Up here, a little bit of excess, which was this wick over here, right? That is excess. Excess means usually the auction is over, right? Remember, market profile is an auction theory type of thing. So here, we kind of had excess here. We didn't have excess here, but then we gapped higher, and all of this creates excess there. So we'll get more into that in the next video, but just want to finish up with this. This is kind of the basics of market profile and what TP or just a regular volume profile is. So we'll see in the next video. And we'll talk more about the TPO market profile.